So thanks for joining us, Natasha. I'm really excited to have you on board. Today, we've got a specialist from Scotia Wealth Management. She's joining us today, and we're going to talk all about some of the uncertainty and more specifically, business transition. So a little bit about Natasha. She lives in Niagara. Correct me if I'm wrong, Natasha. You live in Niagara. You've been with Scotia Wealth Management for a while, and I know you've got a good portfolio. You touch hospitality, some other industries, and you work specifically with business owners. Can you tell us a little bit more about what you do and how you do it?
Yeah, so myself and my team, we work for business owners across Ontario. Right now, we have clients in manufacturing, in law, in hospitality, real estate, a number of various industries, and we do personal and business financial planning as well as investment management for both corporations and for individuals. So many of our clients will have corporate money as well as RSPs, tax frees, and we do planning in order to bring all of that together and make sure they can kind of achieve what it is they're looking for in their life.
That's great. And I guess the other thing that we have in common that I just realized is we both grew up in family businesses. So I think oftentimes business owners are curious as to whether or not we can relate to them. Do you know what the struggle is of a business owner? And I think in this case, we both can. You grew up in a family business. I grew up in a family business. So I think that's a perspective that is sometimes really valuable in what we do. So really excited to have you, and looking forward to talking about a topic that's really near and dear to me.
Yeah, absolutely. No, being from a family business, you actually definitely see the interfamily conversations and disputes at times, and can respect kind of what everybody's looking to do. Everybody's looking out to do the best thing for their family. So how can all the minds come together and make a great business and a great family plan going forward?
No, that's great. And one of the things I know we talked earlier about is the importance of really planning prior to selling your business. And I think oftentimes, we get contacted by someone who's ready to sell, but they may not have this particular piece in place. And I think it's sometimes overlooked, not always overlooked. Sometimes there are bits and pieces that are put together, but not all of it there. So I think it'll be really good just to learn a little bit more about, in an ideal state, how would you prepare your business for sale on the personal side, but also how it connects to the corporate or business side. Because I think you can't really disconnect the two. They're very interconnected at the end of the day.
Absolutely. So that's kind of what motivated us to have this conversation today, is just making sure that you're personally prepared for the sale of your business, and that you have planned for it, and that I say that you're really the one in the driver's seat. You're planning exactly what you want for your business, and of course, you're in the business of business sale. So how can you be best prepared for it? Who do you need on your team? So I'll kind of jump into what we have prepared. So some of the options that we talk to our clients about when they're talking about transitioning from their business is, of course, a third-party sale, in which we'd work with someone like yourself, Jim, or the opportunity for a management buyout, or the opportunity for family succession. And it really depends on what it is that your family is looking to get from your business. It depends on what industry you're in, whether or not a management buyout or a third-party sale might get you the most value from your business, and how ready you are to hard part from your business. A lot of those things can come into play. when you're deciding which of these options is best for you, and for you and your family. Today, we're going to focus on third-party sale just because all of your connections are most likely interested in third-party sale. What does that look like? How do we get best prepared?
That's great. Yeah, and what I'll say too is I think it is important to ensure people understand all of their options. And you know, I would recommend that everyone looks at everything on the table, make sure that they choose the option with the best fit. But one of the things that I think is so key when we look at statistics about a successful sale, there are really two key factors when you look at the research. One is having the right people in place, and the other is planning in advance. So can you tell us a little bit about what the ideal timeline is and what steps are included?
Yeah, absolutely. So I took this timeline from actually a much larger kind of sheet that we follow in terms of what we should be looking at 5 years out for a business sale. So these are just kind of the biggest items that we would typically see. So we like talking about 5 years in advance, which most people, Jim, we were talking about, most people aren't really thinking 5 years in advance with their business because they're just going day to day and crushing it. But if you're thinking you might want to sell your business, let's say about 5 years in the future, or even more, start putting on your, we call them buyer glasses. So thinking, if I were to buy a business in my industry, what are the things that would need to be in place? We're going to look for high sales. We're going to look for a business that doesn't depend on the owner. We're going to start really making sure that you're prepared for sale, both in your business and those aspects, but then also make sure that all of the shareholders are on the same page, potentially that your family stakeholders are all as well kind of on the same page and are going to support you in transitioning your business. So those are kind of the biggest items, even 5+ years out, you can start thinking about, versus moving maybe about 3 years in the future. These are all kind of rough general ideas, but just so that you're not thinking, okay, today I want to sell my business. So maybe about 3 years in the future, start building out your dream team. So make sure you have a great financial advisor, great accountant, great lawyer, people who are looking out for your best interest, who have the same goals in mind that you do. And they're going to accomplish what exactly you're looking to accomplish for your business and for your family. About 3 years out is a really good time to know your magic number, I like to call it. So how much are you looking to get for your business? What is realistic based on the market? So coming to somebody potentially like Portage for a consultation at this point of what's realistic based on the market. And then what do I need in order to accomplish what it is I'm looking to accomplish in retirement or going forward in business, or what our family needs are going forward. And at this point, it's a good time to start talking to your accountant more so about, is a share sale most valuable? Is an asset sale going to be most valuable? How do I need to potentially restructure my business in the next year to make sure that this goes through without any hiccups, and to make sure that we are getting kind of the best after-tax number for our business. So that's about 3 years in advance. You want to start those conversations.
So just to jump in there, I mean, I think that's like such a critical point where I'm in like the same boat as you in that the sooner you start, the better. I think sometimes people feel as though if it's going to take me a year to sell my business, I'll start a year in advance. But the reality is there's so many moving parts and pieces. There's other people involved. And just to give you a little story, I mean, we had a client last year who, you know, had all the key advisors except for the wealth advisor. We sat down like we typically do. We talked with the accountant. We came up with the best structure. We're going to sell the shares. We provided him an estimate in terms of what he would get on closing, and then also kind of mapped out what he would get over the next few years. And we brought buyers to the table. We had a few LOIs on the table. Selected one LOI. We're ready to close the deal. And the light bulb went on, and the client said, you know what? I just ran the numbers and I can't sustain my lifestyle at this number. It's not going to be sufficient. And so they did a U-turn, and it was a massive waste of time for everyone. And boy, I wish I would have ensured that they had that number checked. But part of that was not planning on the personal side and connecting the business and the personal side together. And then the other part was just not realizing what really went through the corporation in terms of personal expenses. So yeah,
Yeah.
I couldn't.
No, thank you so much for sharing that story, for sure. A lot of people don't realize that their $600, $400 a month car that's going through their business is a lot more expensive when it's not going through a business, or different things like that, that they were previously a write-off, that they're not anymore. So your personal expenses might or likely are to go up. So that's a really great story. But so the purpose of a 5-year timeline is really to put you in that driver's seat. You only want to go to market once with your business. You do not want to start trying to sell your business, start telling maybe a very small market like Niagara, oh, X type of business is looking to sell, and there's kind of the rumor mill maybe starts or things like that. You really only want to go to market once. You only want to start preparing your employees, your management team once for something like this, because it is a big deal, and you want to be in control of the whole process, and kind of know what to expect. If you're planning really in year 5, 3, 2 years prior, the sale year should be a breeze.
Absolutely.
You should know exactly what to expect, outside of some sort of extreme situation, but that should be the easy part. The hard work is already done. So just making sure kind of 2 years in advance, your accountant has a plan in place that you're going to qualify potentially for the lifetime capital gains exemption if you're a qualified small business. So making sure that all those things have been done, that you do qualify, that your financial statements might have been audited at this point. And then about 2 years in advance is when we have determined you would like to start interviewing brokers. So like Portage, or if you're maybe doing some sort of IPO and going to public markets, it's about 2 years in advance that you need to start interviewing who is going to take your business to market, who's the best fit, who potentially for your industry is the best fit. How exactly are you going to do that? And then 1 year out is really when you're retaining that dream team, making sure they're all there, they're ready to go, they're all on the same page. And this is a really good time for you to talk to your wealth advisor about what are the go forward investment opportunities for this lump sum of cash that we're getting in only a year from now. How are we putting into the markets? How are we staggering it in? What type of investments are going to make up my portfolio going forward? And what can I expect in terms of return going forward?
Right. And you know, another interesting story that we came across was an individual who was planning, was very prudent, and they had a good plan in place, and they had an idea of what their business is worth. And their wealth advisor actually sat down and said, you know what, if you sell sooner, now this is kind of when COVID really hit and the markets tanked. They kind of did an analysis, and they looked at, listen, if you sold today and perhaps you got 10% less, you might make 30 or 40% more in the market. So having someone who can look at it holistically, can run these scenarios and say, you know what, maybe now is a good time if we can get your money to the market and it makes sense. So I think there's a lot of value in ensuring that you've got a team that's looking at the overall picture, not just the business in isolation or their personal situation in isolation. I think it's pretty critical.
Mm-hmm. Absolutely. And that you have a team that you trust their expertise as well. You might set aside a plan. If you don't fully trust the experts on your side, that can kind of fall apart if you're not completely on board. So making sure that in that example, if the business sale goes through, that you are on board with jumping into markets, with jumping into whatever investments it is that were presented at that time, because that would be critical to that plan being successful. So just in terms of personal financial planning or family financial planning, doing a financial plan prior to your sale, but even doing a financial plan at any point in your life, there are kind of three things that you can get out of it, or three overarching themes that are beneficial for a financial plan. So number one is you can maximize wealth. So if you do a financial plan, you can minimize taxes, make sure you're getting the most out of your investments, make sure that all of your wealth is working together to work towards those goals that you're looking to achieve. So that's all of your personal assets, your business assets. How are they coming together to basically do what it is you're looking to do going forward? The second thing, and I think this is especially important for people who are selling a business, is having tangible goals going forward. If you have a financial plan, we have return goals and expectations for our family. You have goals for what you're looking to do in terms of even structuring your wealth. So whether it be a family trust or changing the way that your shares are owned, having a plan that actually says it and has a date attached to it. Often business owners get tied into their day-to-day business. Some of those things get pushed on the back burner. But if you have a plan and you have an advisor and an accountant that are both saying, we need to get this done now, we've set up a meeting with your lawyer, having all those things ready to go can be extremely beneficial for a business owner. And then the third thing that you can absolutely get out of a financial plan is just confidence in your financial future. Are we making all the right decisions? You can even do scenario analysis. So what if we get 20% less for our business than we thought? Or what if we get 20% more? What does that look like going forward? Can we make it work? What if there's some kind of family tragedy where our kind of leader of our family, something happens? What's going to happen going forward? Do we potentially have life insurance in place? Who's gonna take the reins? So just having that confidence that you're making all the right decisions is huge.
No, I think you made some really good points. And one of the things I wanted to ask you was how do you connect, I guess, the business piece to the personal piece? Because I've seen a lot of financial plans where people will come to us and say, this is the financial plan that was generated for me. And when we go through it, they've been putting money aside. And then when it has their business or the value of their business, there's a zero beside it. And so the assumption was, hey, there's no value in the business. We'll assume zero. How do you approach the business and personal piece?
Yeah, so you have to, when you're looking at Mr. and Mrs. Smith, potentially their business is their biggest asset, and it's where they've put most of their time, most of their energy. It's the thing that is generating income for them on an annual basis, and it's actually what is going to ultimately fund their retirement. So putting in a zero value, you are not ending up addressing lifetime capital gains exemptions or other opportunities to address tax ahead of time. You're not addressing, like, how are you going to draw from a holding corp going forward for your retirement? Those are critical, and that's how you are actually getting income in the future. And it's so important. Jim, we were talking about how valuable your business is to you, even as a person, but realistically, you didn't start in business to be the best in your business. That's generally not what motivated you. What was really important to you is, I want to make sure my family is secure. I want to make sure I'm making all of the best decisions for myself all the time. I just want to be extremely comfortable, or I want my kids to be comfortable in their finances. So having a financial plan that uses your business to answer all of those questions is so valuable. Like, you've worked so hard to build that asset. To assign a zero value is really a disservice. So we were talking, and it can be really beneficial to have even a business valuator come out kind of early from, like, a broker, say, okay, we're kind of seeing businesses in this range in your industry. So let's play with that going forward, just as an estimate to start.
Yeah, no, that's good advice. I think it is second nature to you because you're involved in, more complex situations. You work with, sizable businesses, and you're working with their accountants and lawyers very closely. And I think that's oftentimes the difference between some businesses who are looking to sell but haven't really connected all of the dots, whereas you can look at things well in advance. Perhaps there's a need to set up a trust, or perhaps the corporation and the structure, the holdco and opco isn't structured appropriately. And I know it is very second nature to you, but surprisingly, a lot of people haven't done that stuff. And it's not really something you can do a year before, sometimes not even a couple of years before. It takes time. So I can definitely appreciate where you're coming from.
Mm-hmm. Yeah, so along those lines, these are just some high-level points for financial planning, specifically for business sale. So again, planning ahead, you can save thousands of dollars in tax, and again, really put yourself in the driver's seat with, what do I expect to get from this business sale? Do I have everyone on my team that I need? Do I have people who understand my situation? And people who understand, again, yes, the complexity and what it's going to look like going forward. And then kind of the second piece is, you're going to come into potentially a very large amount of cash all at once. So what does this number mean to you? Again, how are we investing it? What's the plan? You want to be confident that we know these are the opportunities that we have. This is how we're going to get our money to, again, work for us going forward, and that you're not kind of intimidated potentially by this large amount of cash. And then also know what it means for your family. How is your family going to feel about this cash going forward? How are they going to potentially stay motivated, maybe a second generation? How are they going to stay motivated knowing that there's maybe this cash value, where before there was a business that didn't really have a number tied to it? So just thinking about all those things, and also having open conversations. This is more of like the soft aspect, but having open conversations with your family about what's really important to your family in terms of values. We're hard workers. We work for our family. We work for the next generation. Things like that is really good conversations to have ahead of a business sale, and not when there's suddenly cash in an account. Especially if there's maybe concerns of illness or things like that. It's important to talk to your family. And then really important with the financial planning for business sale is, again, figuring out that magic number of, we don't want to run into a situation like you have had in the past, Jim, where somebody backs out of a sale because they suddenly realize, this isn't enough money. I need my business in order to survive for as long as I need. So knowing that number based on, maybe you're selling your business to buy another business. How much money do you need? How much cash do you need? Maybe you need to know your business number to determine, or kind of go backwards based on what are your lifestyle requirements. So what are your lifestyle wants? What are your lifestyle needs in retirement and going forward? And bring that back to today. How much do I need to sell my business for to create that tax efficient income going forward that is going to pay for my lifestyle? So that's critically important, and you've seen that, Jim. And then you might also have estate or charitable gifting goals, especially later in life. What kind of business value? How can I structure today? What can I actually even do today to satisfy these future goals? And then also contingency planning with the business sale. So what happens if there's some sort of extreme market event where we get less for the business? Or what happens if our business leader, something happens to them? Make sure that you have kind of all those things in place prior to getting involved with, what kind of number can I get for my business? And a financial plan can run through numerous scenarios, and how we can plan for each various potential opportunity.
Yeah, it's interesting. two pieces that I think is really fascinating. I mean, I think a lot of people start their business because they've got a passion about something specific, and they feel as though they can provide value. Um, and oftentimes, my personal philosophy is, you have these personal goals or values, and that's driving your business, and your business ultimately is catering to your wants and needs in your personal life. But sometimes as the business evolves, it becomes its kind of own beast, where it no longer represents your personal values or needs, and it becomes its own thing, and it disconnects from your personal goals, maybe your family goals. But then down the road, you made a really important observation that, you also need to look at your retirement and say, what do I want at that point in time? And am I going to get it from the business? And I think if you're planning, at the inception of the business, and you're thinking about what your goals are, and you're kind of in touch with your wealth planner like yourself, and you got a plan in place, it's probably evolving over time. But over the 20 years or 30 years that you're running the business, if you really have that mindset, transitioning out will be seamless at the end of the day, because you've been planning for it. You know what your retirement goals and needs and wants are. It becomes pretty straightforward. So I guess, like, how many clients would you say you have who really right at the start are developing their business and personal goals in combination? Then they carry it right through their business career. Do you ever see that?
People don't generally plan really far in advance for what ends up happening. But I really enjoy talking to my clients about opportunities, just in order to get them to start thinking about transition. And so what I mean by that is, okay, for a client in real estate, you might have an opportunity to sell to a REIT. Just putting that bug in somebody's ear. Oh, you have an amazing business. You could potentially sell that to a REIT. Oh, I'd never thought of that before. Or asking clients, oh, you put so much time into your business. You work so hard every day. You put so many hours. Do you have really good managers that you trust? Just having those small conversations that chip away at all of these elements that you would need in order to sell. And a lot of my clients are far away from selling. A number of them are far away from selling. A number of them have gone through kind of a sale process already. But for the ones who I know are so in their business, we often bring up ideas like, you could sell to a public company. You could sell to your managers. Do you have really good managers? What do they do? Tell me more about your business, just to get them thinking that there's more outside of your business. Like, you've done an incredible job to build up an incredible business and build up substantial wealth. So what can you do with it? There's so much out there. There's so many opportunities out there. Maybe you want to transition from being a plumber to a real estate investor. Like, all those opportunities are there. So we talk about opportunities all the time.
That's great.
All the time.
It's good that you open their minds to what's out there, just having a general awareness of what's possible. Because it's true, and I get caught up in this too, where you're kind of tunnel vision, you're grinding it out in your business, and you forget to look around and see what options actually exist. So it's good that you have that objective perspective. Yeah, that's lovely. So for people, business owners, individuals who perhaps want to start planning out, what's the best way to reach you?
Yeah, of course, just a call or a text anytime to set up a Zoom or a Teams meeting where we can get to know more about what are your goals? What would you want to get out of an advisor, and what can we offer you? Typically, we'll offer some ideas right off the bat, and then dive into more of a long-term relationship and start planning and start into long-term investments after that.
Well, thanks for joining us, Natasha. Really appreciate it.
Yeah, thanks so much, Jim.